Hey everyone, it's Instructor Matthew from the SCT Club, and today I want to teach you how to properly create a trading process. A lot of beginner traders enter trades because they think they look good and they don't actually have a trading system that filters out the bad trades from the good trades. By having a trading system, you're going to filter out the bad trades and make sure you capitalize on the trades that are likely to be winners. We're going to go through how to properly spot entries and capitalize on an area where people are making mistakes. We're also going to go over how to manage your trade while it's currently open. And finally, we want to set our take profit, making sure we set up our exit in an area that's very likely to be hit. So by doing this, you should reduce the amount of emotional decisions and really increase your consistency. Let's get right into it. Let's get right into the 4 steps of my trading process. Step number 1 is going to be about direction. So over here, we're on the Bitcoin chart on the daily time frame, and I'm going to start looking at my moving averages. I use 2 types. It's the 5-day exponential moving average and the 10-day exponential moving average. You can see it over here in purple and in yellow, these 2 lines. So right off the bat here, we notice that price is above these levels. We are actually uptrending on these moving averages, okay? So it seems like we have an upward trend going on. We can also see down here on the MACD and on the RSI that we're trending upwards. This is further confirmation that Bitcoin is moving higher right now and that we have most recently seen upwards momentum. So right off the bat, I know that I should have a long bias, okay? You need to decide if you want to only trade long or short or range bound, or if you're willing to trade all of those. But make sure you understand the direction on the daily time frame first to know where your bias should be. If you're trying to short while price is above the moving averages, that is riskier. Okay, it's better to trade with the direction when it's a trending market. And right now, we see that Bitcoin has moved above resistance, and we have those uptrending moving averages, MACD and RSI. So we're more bullish than bearish right now, and we should be aware of that. So that is how you properly look at the overall direction of an asset. But we're not going to stop there. Let's take a look at step 2. Okay, for step 2, we're going to want to look at the location that we're trading. Are we experiencing a breakout? Are we experiencing a breakdown? Are we range bound? This is very, very important, as it will let us know what to expect for our trade and the difficulty of the trade as well. So as you saw with the previous example, we were actually moving above resistance, meaning that we were already have confirmation of a breakout, okay? Map out your support and resistance levels. It doesn't have to be complicated. We're talking basic horizontal and support or any bullish or bearish trend lines. So the location of the trade will help you decide how you should actually make that trade. For example, if we already have confirmation that we moved above resistance and that we're breaking out, you can feel more confident in your long. However, if we assume that we enter this trade, for example, while we were range bound between resistance and support, then you're going to want to trade it like a consolidation trade, meaning that we're longing at support and shorting at resistance, okay? So you have to trade depending on the location. And also, when you're setting your take profit and your stop loss, that goes directly into the location of your trade. So if we enter over here on this confirmation of the breakout, we're going to want to put our stop loss in an area that's very unlikely to be hit. For example, below the previous low. That means that the trade will have to be completely invalidated for us to get stopped out. Also, depending on the asset you're trading and your experience level, you might not need a stop loss at all, because we want to make it very unlikely for us to get stopped out. So over here, we place a very unlikely to get hit stop loss, okay, below the previous low. And we're going to place our take profit at the previous high, okay, or right below the previous resistance. So in this example right here at $85,000, Why? Because our next big resistance is at 86K. So we're placing it right below that. If we're trading, for example, in this range bound area, let's say we long after the retest of support, we're going to put our place once again below the previous low, and we're going to target the top of that range. So you see how it depends on how we're trading. Now, let's say we're just trying to trade the actual trend of the moving averages, like over here during this downtrend. Well, in this situation, you can ignore more of the actual resistance area, and you're going to want to look at where you should set up your entry, typically on a retest of the trend. So over here we have a bounce, price is already moving below the 10-day moving average, and we have a rejection of the 10-day moving average, okay? Exponential moving average. So that is confirmation that we can go ahead and enter our short, and we would go ahead and set up our position. We're going to target the previous support level, okay? So go ahead and zoom out, look at where we have our next support level, and we're going to want to target a little bit before that. Now, in terms of that stop loss, this is where it gets different. If we're purely trend trading instead of a range or a breakout or a breakdown, we can set a tighter stop loss. Why is it? Because if we're in a trend, the price should be fairly steady. If you're seeing a lot of choppiness and the price moving above those exponential moving averages, then it's probably not a clean trend and you shouldn't be trading it in the first place. But over here we have a clean trend, so we're going to want to place it just a little bit above the actual trend line. Okay, in this case, these moving averages, specifically the 10-day exponential moving average. So that is how to trade depending on the location of the actual trade itself. Let's look at the next step to validate our trades. Step 3 of our trading process is going to be confirmation. This is the evidence that we need to see to make sure that we enter our trade. And like I said, we want to look for how the price reacts at a certain level. We should be entering our trades not based on what we think, but what the market is telling us. So, for example, notice how when we come and test this support level, I didn't say enter. I waited for the retest. We came back, tested it. The price actually temporarily moved below, yet we had a long wick and a close back above the support. This is exactly the type of confirmation and evidence we want to see to make sure we enter this trade. We also want to be paying attention to the volume indicator. So for example, for this downtrend over here, we can be confident that we found the bottom when we see this extremely high above average selling volume. That means that the sellers are exhausted and that we're likely going to see the trend change. So the key word here is to look for areas of high confluence. This means that we have multiple indicators or indications that are confirming our trade idea. For example, if we look over here on this Bitcoin long trade, we see that price is moving above the exponential moving average. We're uptrending on our exponential moving average, and we already broke out above support. We have 2 candles that are already above that support level. We're uptrending on our MACD. We're uptrending on RSI. We still haven't hit the overbought region yet, which by the way is a bullish sign, not a bearish one, because we're already uptrending. So in fact, we would only be bearish when we go into overbought territory and then exit overbought territory. So another thing to look at is also the histogram. These are going to be these green bars over here on the MACD. This is further confirmation that we're indeed uptrending and that momentum is with us and not against us. So whatever you're trading, whether it's a downtrend, a range bound situation, or an uptrend, look for high confluence. You don't need to draw 1,000 things on your chart. Stick with basic patterns, basic support and resistance, and you don't need 1,000 indicators. I have 4 indicators: the volume indicator, the Bollinger Bands, the 5-day exponential moving average, and the 10-day exponential moving average. And a lot of the time, I actually remove the 5-day exponential moving average and I remove the Bollinger Bands. This gives me a lot cleaner of a chart setup. If I know the direction that we're trading in, I might not even need the RSI and the MACD. So I'm focused on the price action and the basic support and resistance levels, as well as what the trend is telling us. This way you can clean up your trading a lot and It's only if you're a very advanced trader that you should be adding in more indicators. If you're more of a beginner, you should actually be using less and not more. So let's go ahead and look at the final step of our trading process. Hey everyone, if you're enjoying this video, make sure to check out our Telegram channel. There you'll find actual trades from myself personally and the exact frameworks I use before entering my trades, so you can see how I actually go about my analysis. And you can of course ask me questions and learn with our entire community. If that sounds interesting to you, make sure to check out that link in the description below, and we'll jump right back into the video. Okay, so step 4 is going to be specifically focused regarding the actual execution of your trade. This is the exact moment you're going to enter, how to manage it throughout, and where to say that take profit in a way that it's very likely to be hit. I also want you to be aware of your account sizing. You should typically be using 1 to 2% of your account per trade and not risking more than that. Let's look in a simple situation like this third retest of this support, okay? That would be an area where we would want to long. Now, how do we actually know that we want to long that? Well, we know that we have the support there and we have 2 neutral candles, okay? Execution is going to be very focused on looking at the actual candlesticks on our entry. So we notice that we have a doji candle, which is a neutral to bullish candle, especially after a big drop like this. We then have another very flat candle, okay? It has a small body and 2 wicks. It's a little bit bigger than a doji, but it's basically a second neutral candle, and we came and had that wick down to the support and bounced off it. That's a very good sign that we're gonna get another bounce here as we did on the previous one. And the next candle is an actual green candle. That's giving us further confirmation now that we're bottoming and retesting at the support. It's not time to enter just yet though. We see that the price bounces, we hit that 10-day exponential moving average, and we pull back. We want to be patient and wait for price to move above the 10-day exponential moving average, as this is full confirmation that we're ready to move higher and that the momentum and direction is with us for this long trade. So we would enter the trade after 1 candle close, confirmation above that moving average. In this situation, this red candle over here. So we would enter on this red candle, place your stop loss, either if you want it to be tighter below the previous support or below the previous low, and make sure to set your take profit right below the previous resistance. We're not trying to chase the maximum out of every trade. We're trying to sell in an area that's likely to be retested. If you do this, you're going to increase your win rate substantially and make it much less likely for you to have losing trades, because you're taking very, very high likelihood trade setups, and we're using a stop loss here, which will avoid disaster for any beginners. So this is a high probability trade with proper setup and properly setting up your entry and take profit to make sure that you have a very high win rate. We're going to look at one last more complex example now that you learn the 4 steps, and make sure to not skip any of these steps during your trading process. Okay, so we're going to look at a little bit more complex of an example to teach you that sometimes we need to look at the wider pattern that we're trading. There can be a pattern overlaid into the basic support and resistance that we're looking at, and that's what I want you guys to start trying to spot as well. So over here, we're going to use our arc tool, and we notice that in fact, we're trading a rounded bottom pattern, okay? So I'm going to go ahead and use this arc tool, and you'll see that within that range, okay, the setup that was leading up to this breakout is going to be a rounded bottom setup. Why is this important? Because if we spot this trading pattern, we can actually know that we can predict the actual size of the breakout. By doing this, we take the top to bottom of the actual arc of the rounded bottom, and we extend this out from the breakout area. This gives us the exact level that we expect the trade to actually close at. In this situation, 86,641. So we can actually extend our take profit a little bit because we know the pattern that we're trading in. We can also move up our stop loss down to over here because we know that it's very unlikely that we move lower than the actual support of the rounded bottom formation. So this allows more accuracy within our trades and to understand what we're actually trading. Hopefully you enjoyed this video. Okay, so I really hope that video was helpful to you. And remember, trading is not about looking for more opportunities, but making sure you're taking the best trades possible and removing the ones that are going to be a bad setup for you. Also, you have to keep in mind that this is not to make your trading more complicated. It should make it easier. So you don't have to add 1,000 filters before your trades. Just make sure that you're following the steps that I taught you and that you don't skip them. Think about your last few trades. Which steps did you actually skip? And what was the result of you skipping that step? If you enjoyed this video, make sure to leave a like, subscribe, and check out the SET Club channel on Telegram, where you can find all my analysis and talk to me directly 100% for free and learn how to trade even 100% free. Thank you so much for watching and have a great day.